Let us continue with the second problem on journal entries which we had started earlier. We will continue doing new transactions. Now we have the transactions here. Purchase raw material for cash rupees 5 lakhs. How do you record this transaction in your books of accounts? The entry we are going to write is purchases. I'm purchasing stock of raw material. It is an asset for me till the time I consume it, till the time I use it. It is an asset for me. The day I sell this stock, the cost price of the stock will be expensed off and will be debited to the profit and loss account. So till the day I use this stock, I consume this stock, it remains an asset for the business. Purchase account at R2, cash account. That means purchase account has to be debited and cash account has to be credited. The logic is purchases. I'm saying stock, I'm treating it as an asset, hence it is a real account, comes in and debit. The same stock, when it is consumed, when it is sold off, the cost price of the stock consumed or sold would be considered as an expense to determine the profits. Then cash, it is real account, it goes out of the business, hence it has been credited. Let us go to the next transaction. Purchase raw material worth rupees 3 lakh and issued a check. Now what we are doing, we are purchasing some more stock. Purchases, you need not write, only for the sake of understanding I am writing here stock. Purchases account debit rupees 3 lakhs. The same logic applies. Now we are issuing a check to the supplier. What the supplier is going to do, he is going to go take the check, he will deposit it in his bank and the check will be presented to the issuer bank. So ultimately the payment is going to be made by our bank to the vendor. So the money is getting withdrawn from our bank. The bank is paying money on our behalf. The bank is giving money on our behalf. Hence we have to credit it. What is the logic we are following? Purchases, or you can say stock, real account, comes in, hence debited. Bank is a personal account. It is giver, credit. If you remember, if you see the bank account in the ledger, what happens is all deposits are recorded on the debit side and all withdrawals are recorded on the credit side. So here we are recording a withdrawal. Whenever we deposit money in the bank, it will be recorded on the left side and withdrawals will be recorded on the right side. If at any point of time you want to know the bank balance, just find the difference between the total of the debits and the total of the credits, you will get the bank balance. That is the purpose of preparation of a bank account. Next, so if you observe in these two entries, common thing is when we purchase stock, it is debited. If we pay cash, cash is credited. If we pay in check, bank account is credited. Now the next transaction, purchase raw material from supplier limited, rupees 5 lakh. So there is a vendor whose name is supplier limited. We are again purchasing raw material from them for rupees 5 lakh and they have given us 3 months time of credit. Here we are not mentioning whether we have paid cash or check. So the vendor is giving you time to make the payment, and it is common in businesses that the vendors will give you some time to make the payment. So what is the entry we are going to record here? The entry will be purchases account debit rupees 5 lakh and we have to make the payment in the future to supplier limited, hence I am going to credit his account rupees 5 lakh. What is the logic I have used in this journal entry? Purchases, real account, comes in, debit, supplier, personal account, giver, credit. Actually in a journal we only record this entry and we just write a small narration being stock purchase from supplier limited. That's it. This I'm writing only for the sake of understanding. So this logic is only for the purpose of understanding. Once you are thorough with your concepts, then you need not write this logic in your entries. Next, wages paid in cash. How do you record the entry? Okay, before I go into this transaction, if you observe, in all the three transactions, purchases was common, it was debited. When we paid in cash, we credited cash. When we issued a check, we credited bank. And when we did not make the payment, we have to make the payment in the future. We are recording the supplier as a creditor in our books. So whenever this period of 3 months expires, we have to pay this money to the supplier. If you observe the supplier account, we will be writing there buy purchases rupees 5 lakh. So this supplier account will show a credit balance of 5 lakh. That means this is the money due to the supplier, due to the supplier, and this is the money owed by the business to the supplier. Okay. Next, wages paid in cash. How do you record the entry for this? The entry would be wages account debit 1,10,000. It is an expenses. Cash account should be credited 1,10,000. What is the logic I am following? I'll start with the credit logic. Cash real account goes out, hence credit. Now the question arises, cash is going out, we have recorded the credit part. Why did the cash go out? The cash has been spent for an expense called as wages. Wages is a nominal account. Expenses and losses debit. So this is the logic, very simple entry. Next, paid electricity expenses in check 75,000. So how do you record this entry? We are paying, let us say, the electricity bill. We may use our online methods of payment like NEFT, online transfers, NEFT transfer, RTGS, etc. Or issue a check. The effect is the same. So how do you record the entry for this? Now the payment would be made by the bank. So we have to record the bank as the giver. We have to record a withdrawal in our bank account. So I have credited bank. This money is paid for what? It is paid for expenditure called as electricity expenses. So what is the entry we are going to record? Electricity expenses account at R to bank. Logic is electricity expenses, nominal account, expenses should be debited. Next, bank account is a personal account. Giver, bank is giving money on behalf of the business to the supplier of this electricity. Giver, credit. The next transaction before us, transport expenses of the business paid by the owner from his pocket. So now some transport expenses of the business, expense incurred for transporting of raw material, we can say the expenditure incurred by the business has been paid by the owner from his pocket. It's not being paid out of the cash of the business or out of the bank account of the business, but it is being paid out of the pocket of the owner. Owner is paying this. So how do you record? Now who is giving money? The owner. So I'll write 2 capital because owner is the giver. Hence I'll record credit to him 50,000 rupees because he has given. He has paid money on behalf of the business for what? So we have to record the expense as well. Transport expenses account debit 50,000. So what's the logic I followed here? Transport expenses, nominal account, expenses debit. Capital, you can say owner, personal account, giver, credit. So this amount will also be credited to capital account and hence this amount is due by the business to the owner. So if you observe the capital account, what will happen is when the owner introduces capital in cash, we'll say buy cash here. When he introduces some money in the form of a check, we'll say buy bank here. If he has given an asset to the business, we'll say buy land or assets, whatever he has given. He's paying some expense of the business, we'll say buy expenses, debit side and credit side. So the total of all these entries appearing in the capital account will give us the information about the total capital introduced by the owner into the business. Let us continue our next video, some more journal entries. Thank you.